Hi, today we're going to have a look at the 2011 Leaving Cert Ordinary Level Final Accounts Question 1. It's a departmental account. As with all question 1s, we are given a trial balance, we are given some additional notes, and we are asked to prepare a P&L and balance sheet. Here we are asked to prepare a departmental P&L, which is similar to the normal P&L, when you know we have to divide it out between two different departments, fashion and sportswear. So to start off, we're going to have a look at the notes first of all anyway. So note 1 says that closing stock at the end of the year for fashion was 63,000 and sportswear was 39,000. So fashion was 63,000 and sportswear was 39,000. There's no workings to do here. We just need to know the closing stock of fashion will go in cost of sales in the P&L, and it's a current asset in the balance sheet, and same with closing stock of sportswear, we'll use that in cost of sales in the P&L also, and it's also a current asset in the balance sheet. Note 2, we have to work out depreciation. So buildings is 2% of cost, and furniture and fittings is 12.5% of book value. So buildings is 2% of cost, so buildings cost 750,000, so we're going to get 2% of that. So depreciation of buildings is 15,000, and furniture and fittings is 12.5% of book value. Now the cost is 200,000, but the book value is 160,000. So we're going to get 12.5% of 160,000, which is 20,000. Depreciation of buildings is an admin expense in the P&L, and we'll also add it to the accumulated depreciation in the fixed asset note in the balance sheet. And the same with furniture and fittings, it's going to be an admin expense in the P&L, and it will also be added to accumulated depreciation in the fixed asset note in the balance sheet. Note number 3 says the floor space is to be divided as follows. Fashion is 75% and sportswear is 25%. So fashion is 75% and sportswear is 25%. And we will use them again later on when we go through our allocation of expenses. They will become important then. For the moment, we just need to know the floor space is divided 75% for fashion and 25% for sportswear. Note 4, provision should be made for debenture interest due at the end of the year. So we need to see, is there any debenture interest that we owe at the end of the year? So to do the debenture interest, first of all, we need to see what the debenture interest for the year should be. So to do that, if we go to our debentures in the trial balance, we can see that there's 6% debentures. The debentures, our loan is 140,000, and we got the loan on the 1st of April, so we had it for 9 months. So work out the debenture interest for the year to be 140,000 by 6% by 9 over 12, because we had it for 9 months. So the debenture interest for the year should be 6,300. Now if we go down through the trial balance, we have to just see that we pay any of that. And there's nothing here about debenture interest paid. Some years there will be, so there's no interest paid. So the full 6,300 is still due. Now the debenture interest for the year will go at the bottom of the P&L, and the debenture interest due, which in this case is the same amount, will go as liabilities less than 1 year in the balance sheet, because it's bad we owe that 6,300 at the end of the year. Note 5 to the accounts says, included in advertising is a cheque for 9,000 for an advertising campaign for year to 31st of the 3rd, 2011. So of the 8,000, 3 months of that is for next year. So that's going to be advertising prepaid. Okay, so we need to work out the advertising prepaid. So the advertising was 8,000, the advertising campaign. So if I divide that by 12 and multiply it by 3, it will give me the advertising prepaid. So 8,000 divided by 12 multiplied by 3, the advertising prepaid is 2,000. Now that is taken away from the advertising in the P&L, because at the end of the year we always say we add stuff that's due and take away stuff that's prepaid. So we're going to take away that 2,000 from advertising in the P&L because it's not to do with this year. And it's going to be a current asset in the balance sheet. It's good. We've overpaid advertising for €2,000. We don't need to pay it again. And the last note tells us, note number 6 says, expenses applicable to both departments should be divided on the basis of sales or floor space where appropriate. So all the expenses in our P&L have to be divided between the two departments, fashion and sportswear. We can do that two different ways. We can do it based on the amount of sales each department make, or we can do it based on the amount of floor space each department has. And we need to know which one is more applicable to each expense, and we'll see that when we do the P&L. But for the moment, we just need to work out how to divide out the expenses. So for sales, if we're dividing it out based on sales, we can see that, if we go back to our trial balance, the sales for fashion is 600,000 and the sales for sportswear were 300,000, which is 900,000 sales in total. So fashion accounts for 600 over 900 and sportswear accounts for 300 over 900. So fashion is 600,000 over 900,000, which is 2/3 of the sales, and sportswear is 300,000 over 900,000, which is 1/3 of the sales. And we're better off working on fractions here, because we start working in decimals, we get into repeating decimals after the decimal point. So it's easier to leave sales as a fraction. And floor space, it tells us it's 75% for fashion and 25% for sportswear. So we can leave those as percentages, they're fine. So now we have all the notes done, we'll have a look at the P&L. And the first thing, when we look at the P&L, I'm just going to leave the division of the expenses up here beside us, so it'll be easy to see when we're dividing out the expenses. So we said it was 2/3 and 1/3 and 75% and 25%. Okay, to start our P&L, the first thing in our P&L we'll always start off with is going to be our sales less sales returns. So from the question we can see that the sales, as we spoke about a minute ago, for fashion were 600,000. The sales for sportswear were 300,000, and in total that's going to give us 900,000. And again, you'll need 6 columns here. These 3 columns, I suppose, are for the totals, and these 3 are for the workings, the same as you'd have 2 columns or 3 columns in your normal P&L. So these will be for our totals, and then like for cost of sales, we do our workings here and then put the totals over here. It just makes it easier to see what we're doing. So fashion, that is done. Then sales returns, if you go back to our trial balance, we'll see that there are no sales returns for sportswear, and fashion sales returns are 3,400. So 3,400 for fashion, there's no sales returns for sportswear, so the total is 3,400. And these figures are just coming directly from the P&L. So I'm going to taking away my sales returns from each column. So sales less sales returns gives us in total 896,600, and this is the breakdown between the two departments. So our heading then is less cost of sales, same as always, and we'll always start off with opening stock. So opening stock for fashion again is coming directly from the trial balance, 53,000. And opening stock for sportswear again is coming directly from the trial balance of 46,000. And they're the stocks of the first of the first. So in total my opening stock comes to 99,000. Purchases. The purchases for fashion again is coming from the trial balance, 290,000. And the purchases of sportswear from the trial balance are 158,000. So they will give me total purchases of 448,000. And carriage inwards, there's no carriage inwards. For fashion, I can see from the trial balance under the sportswear department, there is carriage inwards of 5,000. And that will leave me with a total carriage inwards of 5,000. Now we're going to add these down. And then we're going to take away closing stock. And the closing stock we're just getting from note 1 to the accounts. So the closing stock for fashion we said was 63,000. The closing stock for sportswear was 39,000. And in total they give us closing stock of 102,000. Now there's nothing too difficult so far. All of those figures pretty much are just coming directly from the trial balance. So to work out my cost of sales then, I'm going to do that in this total column on the right hand side. So these 3 columns over here. So the cost of sales at a total cost of sales will be 552 minus 102, which is 450. The cost of sales for fashion will be 343 minus 63. And the cost of sales for sportswear is 209 minus 39. And now it's easy to see these are my cost of sales, and then my gross profit will be just simply my sales minus my cost of sales. So my total gross profit will be 446,600. My fashion gross profit is 596,600. Is 596,600 minus 280 is 316,600, and my sportswear gross profit is 300 minus 170, which is 130,000. Now on to the expenses, and this is where we have to divide out the expenses ourselves based on the two different departments due to either sales or floor space. So if we go down through the expenses first of all, and here we'll start off, we'll put the figures in the total and then we will divide them out. So the total insurance we are getting from the trial balance, insurance was 32,000. Now, are we going to divide out insurance based on sales or floor space? Well, floor space would be more appropriate because the bigger the floor space, the more insurance they'll have to pay. So if we're dividing it out based on floor space, again, these are figures here. So floor space is 75%, 25%. And if we're dividing it out based on sales, 2/3 will go into fashion and 1/3 sportswear. The floor space we said we divide out insurance on. So it'll be 32,000 by 75% and 32,000 by 25%. Salaries and general expenses is more appropriate based on sales. So the total, and you just need to know whether they're divided out based on sales or floor space and practice and questions. And again, I've all the expenses here highlighted in yellow are divided out based on sales, and the other ones are divided out based on floor space, and these will be the same every year. So salary and general expenses in total from the trial balance is 120,000, and that's divided out based on sales. So 2/3 of it will go here, and 1/3 of it will go here in sportswear. The next expense, light and heat. So again, light and heat is just coming directly from the trial balance. Light and heat is 70,000, and we're going to divide that out based on floor space. It seems more appropriate. So 75% will go into fashion, and 25% will go into sportswear. Directors' fees should be divided out based on sales. So directors' fees for the year are 30,000. And if we're dividing those out based on sales, 2/3 will go here, and 1/3 will go into sportswear. Depreciation of buildings. From the note, we can see we worked out the depreciation of buildings. So the depreciation of buildings for the year is 15,000, and that's going to be divided out based on floor space. So 75% of it will go into fashion, and 25% of it will go into sportswear. And depreciation of furniture we worked out in the notes. So from the notes, depreciation of furniture is 20,000, and again that will be divided out based on floor space. So 75% of it will go into fashion, and 25% of it will go into sportswear. Now we're just going to total down our admin expenses. Total is 287, for fashion is 202,750, and for sportswear it comes to 84,250. Now our selling and distribution expenses. The only selling and distribution expense we have is advertising. And advertising from the trial balance, if we just have a quick look, is 38,000. But from the notes, we said there was advertising prepaid of 2,000. And we said at the end of the year, we add what's due and we take away what's prepaid. So instead of it being 38,000, it's going to be 38 minus 2 is 36,000. So 36,000 is what advertising should be. And advertising will be divided out based on sales. So if it's divided out based on sales, 2/3 of it will go into fashion, and 1/3 of it will go into sportswear. That is our selling and distribution expenses done. So over here on the right hand side, I'm going to get my total expenses. So my Total admin was 287. My total selling and distribution was 36, which gives me 323000. I'm going to do the same for the two departments. I'm going to add the admin and the selling and distribution for fashion. And I'm going to add the admin and the selling and distribution for sportswear. So that gives me my total expenses. So my operating profit then is going to be my gross profit above less my expenses. The next thing we have to do is to take away the debenture interest, and we worked out the debenture interest in the notes. So the debenture interest for the year, which goes at the bottom of the P&L, we said is 6,300, and that's divided out based on floor space, which means 75% of it will go to fashion and 25% of the expense will go to floor space. So we're taking away our debenture interest to give us our net profit, our total net profit, our net profit for fashion, and our net profit for sportswear. And then we just have to add a profit and loss balance coming forward at the start of the year, which we will get from the trial balance, the very final figure in the trial balance. There's a profit of 6,100 coming forward, which will leave me with a profit and loss balance at the end of the year, which will go into the bottom of our balance sheet, of 1,234,400. Now we have to do our balance sheet, and the balance sheet isn't divided out between departments or anything like that. It's just like our normal balance sheet, so this will be the same as other questions. So to start off with our balance sheet, the first thing we're going to have is buildings and furniture and fittings cost, and they're just coming from the trial balance here, 750 and 200,000. Now we can add those and put a line under them because we don't have to use those figures again. Now the accumulated depreciation, we need to be careful here because we need to get the accumulated depreciation up to the start of the year plus this year's depreciation, because that's not included in the figure. So depreciation, accumulated depreciation of buildings. So from the trial balance we can see that the buildings cost 750. They were at start of the year, they were worth 640. So the accumulated depreciation up to the start of the year must have been the difference between 750 and 640, which is 110,000. But we have to add in this year's depreciation of buildings, which we will get in the P&L of 15,000, which gives us an accumulated depreciation of 125,000. And the cost minus the accumulated depreciation gives a net value of 625,000. Furniture and fittings. If a furniture and fittings cost 200,000, at the start of the year they were worth 160, so they must have been depreciated by the difference between the two, which is 40,000. And again, we just have to add in this year's depreciation of furniture and fittings, which from the P&L we get to be 200,000 the total. So again, the cost minus the depreciation will give us a net book value of 140,000. I can add up my accumulated depreciation, which gives me 185. I'm going to put a line underneath that, we don't need the figure again. And I'm going to add up the net book value, which gives me 765,000. And there are no financial assets or intangible assets in this question. Current assets. So to have a look at current assets, our first current asset is always going to be closing stock. And there are two different types of closing stock. We can put them in separately, or we can just add them together here. We have closing stock of fashion, which is 63, and sportswear of 39, which gives us closing stock of 102,000. The debtors figure is coming directly from the trial balance. So if we look down to our top trial balance, debtors is 88,000. And advertising prepaid, we have a note on advertising prepaid. We worked it out. We said we took it away in the selling and distribution expense in the P&L, and it's also a current asset in the balance sheet, so it has to go in here. So if I add my current assets down, I get 192,000. Now I have to work out my current liabilities, or my creditors' amounts due within 1 year. So the first one I'm going to have are my creditors, which are just coming directly from the trial balance. So creditors from the trial balance are 63,000. I have a bank overdraft, and again I'll just look at that because we need to be careful with the bank. I can see down here my bank could be an asset or liability. If it's an asset, it would be a debit balance and it will go on current assets. but in this question it's a credit balance, it's a liability, so it's 9,800 of an overdraft. VAT is just coming directly from the trial balance, which is 10,900. PAYE, PRSI again is coming directly from the trial balance, which is 13,600. These are all credit balances, they're all liabilities. And the debenture interest due, we did a working on. So the debenture interest for the year we said was 6,300. We haven't paid any of it, so the full amount is due, so it goes in liabilities less than 1 year in the balance sheet. So in total, my liabilities or my creditors amounts due within 1 year is 103,600, which gives me a working capital of 192 minus 103,600 of 88,400. And I'm going to add that to my total fixed assets above. And that will give me total net assets of 853,400. Now we're nearly finished the balance sheet. Just have to do the bottom of it. Finance by is the next heading. Creditors amounts falling due after 1 year. So that is our debentures. And the total amount of our debentures are 140,000. Capital and reserves, the authorised share capital. We can see from the very top of the question, the authorised share capital is 700,000. And we can put a line underneath that because we don't use that figure again. The issued share capital from the top of the question is 590,000. To that, I'm going to add my profit and loss balance, which is my final figure for my P&L of 123,400. And that gives me 713,400. And that 713,400 added to my liabilities due greater than 1 year above of 140,000 leaves me with 853,400 for capital employed. And I can see here now my balance sheet is balanced as both totals come to 853,400. And that is the 2011 Departmental account complete. I hope you found the video useful. If you did, please subscribe to my YouTube channel. Thank you.